What's up, guys? It's November 8th, 2023. Markets had a range bound day, and yeah, Bulls and Bears making money on the range, in a range, so it's good. A little bit of a consolidation. The opening was a good clue to a range, and then we had a sell vacuum into support, and we reversed. Yesterday, we had a small gap up, and it sold off, and Bears got trapped, and then we started to have an uptrend, and we consolidated for the rest of the day. Yesterday was more of a range day than a uptrend, honestly. We had an uptrend into a range. More bullish pressure within that range. I had yesterday's high marked out here, so the first 6 bars of the day, I'm looking for a continuation or reversal. This is a 15-minute chart. I'm going to get rid of that. So I was looking for a continuation or a reversal. Since we're trading above the high, if price gets accepted, I'm bullish. If we start to reverse as it was, I'm going to get bearish into. This was my first PT, and then yesterday's low would be my next PT, which is around here. And yeah, I like these days that are very close to the either day's extreme, because you just kind of have to wait for. It's like a nice line in the sand. Bar 7 was a news bar, and we broke down. So Bears have a failed breakout at the high of the day, and I got short here just to go for a measured move of this bar. It was a tough short. However, what kept me in the trade the longest was a spiking channel and the reversal with the spiking channel. So although the price action was rough, it was the context that kept me in this trade, because it made sense to sell for 2 or 3 legs. Like, it made sense that this bar is big enough to catch. Maybe we don't get the measured move. However, with this bar breaking through yesterday's high, the EMA, low of the day, and filling the gap, I was thinking that at least the last week's high would get tagged as a magnet, and then maybe we oscillate. Just how I said I was bearish below this, as price was developing, I was like, it would be reasonable to stay if we're trading above last week's high to be bullish, as long as price action is making sense, because we are trading under the EMA. So it's tough because we're in a tight range, really. That's why this bear channel was, if you traded it, it was a hard hold. Good continuation. We tagged last week's high, and we'll start to buy longs because it worked yesterday. However, Bears get a surprise bar. Bears get a surprise bar, and we take out everyone's stops here. Let me see where this bar closed. So this bar isn't necessarily the best breakout bar, because we're not even closing below these bars. It would be nice if this bar closed on its low. It would be sweet, because it's taking out this low, not 36, not the 37 low. It might not have taken out this low. However, the body would have taken out all of these lows, and it just would have gave it a better appearance. With this bar having a small gap up, I think it's reasonable to get out of shorts, because we're into a support, and we could always get short again if we break out, which is okay. We're day traders. We don't have to hold everything. If you are looking for a swing trade, swing it, but this is a good support level, and Bears get follow through. So we break down, and we start to have a sell vacuum. This was a spike in bear channel. EMA was acting as resistance, so if you were buying, it had to be limit order scalp out, which you can do, but it is hard if you're new to trading price action. It's better to just short the pop or wait for bullish price action to give you your trade. Bears get another breakdown, and these are the strongest bars within this trend. This was a huge bar. This was a huge bar, and the market did take profits on this. And Bulls got 2 legs, 1, 2 into the EMA, and then we sold off again. I was thinking the bigger time frame, 20 EMA, was the magnet. I was short. I got short off this bar and caught the vacuum down. It was about 3 bars, I think. Boom. Yeah. The market tagged, and then this bar accelerated fast. And with this bar, I would be out of shorts at least, or have a stop right here, a trailing stop. However, Bulls are starting to make money now, so from this low to this low is almost 10 points, I think. Yeah, it was about 8 points. And here, Bulls were making money too. So this is not the best downtrend, Bulls have been making money the whole way through. Bulls made 5 points there. Bulls now they're making a little bit more money buying new lows as bears are taking profits. I think it's a good place to get out of shorts around this bar, this level. Wait for more price action. Bulls get 2 legs into the EMA. It's a pretty strong breakout. Let me pause it right there, yeah. So here are the 2 legs the Bulls get. Leg 1, pull back. You could say like 3 legs if you'd like, however you want to count. I just counted as 2 legs to keep it simple. It was something like 1, 2 is how I counted it. I was long here for the second leg. I scalped into the EMA. That was a pretty nice scalp. That was the first time I took a scalp from like a counter trend 2 leg. I was pretty positive Bulls are gonna get a second leg after I saw this bar, and a measured move was met of the breakout of the 18 bar from here to here. I got tagged out around here. I'm gonna delete this line, and I'm gonna keep I'll delete the blue. I'm gonna keep the blue line there for. Actually, I'm gonna delete it and put it back later so you guys see something. So the measured move was met of the first 18 bars. Breakout was met, and that's why I took this trade. I went short here for 1-to-1 like a scalp. I got tagged out here, and then I got short here again for this measured move of this range, and I caught about 10 points down, and I got out. I got tagged out. Got short again. Bulls got their 2 legs into the EMA, and now at this point, Bulls are reversing bearish structure. You see this got taken out. This got taken out. This is getting. They're attempting to close above last week's high again, because I think the market knows if we stay above last week's high, it looks bullish. Bears get a strong push down. However, Bulls, that just ends up being a pullback. I think a lot of people did want to go short here, but I was very suspicious because of the strength of these legs. And this also gives the Bulls a double bottom. A measured move is met, higher low, double bottom, strong breakout to the EMA. Bulls definitely want to close above last week's high. Then they want to get above the breakdown points, and on a good day they make a new high. That's for the Bulls. Bears would want to see this as a double top and sell and continue making new lows. However, I think the market's going to be range bound because now it's gone big down and we're starting to go up. And there's a lot of bullish price action within the bear channel. Bulls get a strong close above last week's high. However, Bulls get a strong close above last week's high, but after 2 legs, maybe 1 or 3 legs, however you count, 1, 2, 3. That was bad. 1, pull back 2, pull back 3. Third leg can tend to fail. So if you're just scalping, I mean you could do whatever you want in the markets. If you know how to trade, you know how to trade. This is a limit order market. And it's better to stay out and wait for like a 2-bar follow through or a 2-bar breakdown. Or just hold long is what I'm trying to say. But if you're new and you're buying highs, expect deep pullbacks, especially on the third flag. It's just not a good idea. Your probabilities for another leg really decrease. However, this is also starting to form a bull flag, so it's up to the trader if this makes sense for another leg up. I was actually in this trade for a while, and I got out right before it broke out. So it was a pretty nice bull flag. It was a deep pullback of the third flag, and then so we could draw this like a range right here. I got out, I think, on the next candle, and then the bulls break out. Yep, bang! I literally missed that one. I was like, wow, I'm done trading for today. But you can see, look, there was no continuation after the biggest bull candle. And one thing I wanted to mention was that the bull's target was the open of the day. The reason it was the open of the day was because we had the first 6 bars were ranging. So this should tell you right away the open is going to be an important price. That's what whenever I see a range open, I'm thinking, okay, if we don't trend at some point in the day, I'm looking for a trade back to the open. I think that's an important price. And that's why I was pretty upset that I didn't get the best part of the trade, because I hit out on this candle thinking it was just going to sell off again how we did here. And then, yeah, the bulls get the breakout. So unless you had a buy stop order set here or here, you buy this pull back into the EMA, you've missed this candle. And as soon as they get to the open, they sell off. So people were trapped here, and then they got their price. They got their almost back to break even. Yeah, they almost got their break even price. And if they're buying low, if someone buys candle 1 and they hold, or maybe they average down a little bit, they get caught and they buy more, their price level is gonna be like around here or maybe around here, and they will be making money on all these bull candles. So that's why when I first started trading, I was like, oh, trend day. Now I'm starting to realize like range days, if you kind of get the context early, it's very forgiving, and you can make money both ways. But it's still hard. I'm still studying these range days, but yeah, it was a good day. I'm actually gonna do a trade review of today because it was the first day I took 3 trades and I had 3 green trades. I felt pretty locked in today in terms of reading price action and what to expect because we ended in a range, and all I told myself was, all right, yesterday's ending price action was a range, so it's like I can expect a range for like 2 hours today. Then we got this failed breakout, and I was like, well, that is selling at range highs, so it would make sense for this to be their next target because that was support from yesterday. So I was able to tie in yesterday's ending price action with today's opening price action, and I plan to do the same thing tomorrow. Right now, we're in a range still because bears are shorting strong bull bars, so that's a range bound environment. Go over to the higher time frame, the daily chart. Bulls are starting to get stalling at range highs. They did close above last week's high. When this bar was forming today, it really looked like bears were going to get something like this, like a 2-bar reversal. However, bulls made it clear on the daily chart they want higher prices, so I think they are going to try and tag the high before turning around or stalling, or however, whatever the market wants to do. Or maybe it's a huge trap and we sell back to the 50% level for the next 2 days. This is a lot of bullish pressure, so I don't think that's going to happen, but it doesn't matter what I think. It's just this is the price action right now. We're in a buy the close rally, and we see doji, so the trend could be pausing in the next couple of bars. And the hourly time frame it's just a rally with a pullback into the EMA. Flag 1, flag 2, that was bad. Flag 1, flag 2, flag 3, and now we're starting to stall again. I want to draw those in actually so you guys can see what I'm looking at. Flag 1, pullback, right? Because we made a new high off the bearish structure. Does that make sense? So I'm counting that as a flag. And then you could say like, let me open this more. I'm going to do this differently real quick. I want to see something. So that's the swing low for the bears. Swing. And then the next swing low, bears make a new low here, so this is a swing. Okay, so do you guys see what I'm doing here? I marked out the bear swings, and now the bulls are clearing that. So that's one flag, test, breakout, and then we gapped up. We didn't spend too much time within this area. However, the bearish structure the swings are getting taken out, and then they take out this swing too. But now the question is, are bulls going to take out the next swing and the next swing, and that's the battle, is who's in charge at what levels. So now if bulls took out this swing, if they just keep going, or maybe they fail at that swing, and now bears are going to get their turn. Are bears going to take out this swing? Are they going to take out this swing? Are they going to So when bears go, are they going to take out this swing? Are they going to take out this swing, and then new lows? That's kind of what I've been focusing on, is the market structure. It's been helping out a lot, holding trades and getting out and where to get in and out. What is it? It's Wednesday, so we got 2 days left. There's going to be 1 day left when you guys see this. It's Friday. I do these breakdowns every day at 3 p.m. Hit the turn on notifications. Hit the follow button if you're learning. Hit the follow button if you trade price action. All right, have a good day, guys. Bye.